A lot of people like to go outdoors, either to go fish, hunt, mountain bike, or go for a hike. And Vista Outdoor produces products just for that person that likes to go outside. They produce bicycle helmets, a lot of ammunition. They have a variety of products for gun owners. They even have eyewear. And it's a well diversified premium products company for the outdoor enthusiast. This stock here is about to split up into two companies, and I wanted to analyze the company and see if it's a good time to buy now or maybe wait until they split up into two different companies. My name is Victor. I have an MBA and a lot of business experience, and I like analyzing companies that I consider investing in. In this case here, I'm going to be taking a look at Vista Outdoor. Do me a big favor and like my video and subscribe to my channel. That helped me out a lot. Now, let me go over my process and take a look at Vista Outdoor. Over time, I've created a process for myself to evaluate a company and feel like I'm making a good investment if I follow four key questions and get the responses I'm looking for. The first question is, do I want to be part owner in the company? And do I like this industry? Do I think management is doing a good job in operating the company well? Is debt under control and less than 3 times EBITDA? And I want to discount the stock. Based on the answers to those questions, I buy, hold, or sell. Over the years, Vista Outdoors has acquired premium brands that are for the outdoors person, whether they like to turkey hunt, they like to hike, they like to mountain bike, they like mountaineering, bow hunting, a variety of things. Vista Outdoor has a product that's probably in that category. And I thought it was a really good idea. I think they really know how to select good companies to acquire and put together a really strong portfolio of products. Now, do I like the industry? In general, I do. I like to diversify into some consumer goods, especially consumer goods that are premium products. And this one here, I tend to think it's a premium product. And I've tracked Vista Outdoor because over time, I felt that it's been undervalued at times. So that's the story on the company. I like the company and I like the industry. The product catalog for Vista involves sporting goods, which is primarily ammunition, guns, that type of enthusiast. They have outdoor recreation, which includes golf items, some Camelback, which is a hydration system for both hikers, mountain bikers, outdoor enthusiasts. They have helmets for bicyclists. And I don't know if you've noticed, boy, there's a lot of e-bikes going around, and I bet you all those e-bike riders need a helmet. And then outdoor accessories that people will use to hunt and shoot and so forth. And they're going to be splitting the company, and they're going to divide sporting goods from outdoor recreation and action sports. So that's going to be the big split that's coming up in 2 months. The company has consistently been profitable, which I really like. Now, they've had a decline in sales, and that's somewhat expected because during COVID, everybody wanted to go outside. So Vista enjoyed a nice growth trend, beginning at the end of 2020, and then it continued in 2021. And there were still some really good sales in 2022. But I think things have kind of calmed down and sales have declined to some extent. Even having said that, they still produce really good EBITDA, good earnings per share, and they generate free cash flow, which is good to see that it's a healthy business. Even though sales are down, they're still profitable. So they're going to split the company in roughly 2 months, and they're going to have sporting goods, which is going to be mainly, for people that like shooting, people like hunting, and that type of activity. That company, based on trailing 12 months of revenue, is about a $1.6 billion company. It also is more profitable. It generates more EBITDA. So I'm thinking that this part of the company is actually going to be more valuable than the other part. Outdoor products is overall sales. It's 1.3 billion in overall revenue. And as you can see, their EBITDA is quite a bit lower. So I think the outdoor products company is going to be lower valued. And my thinking is, boy, I'd love to have this half as opposed to this half because the sporting goods side has greater profitability and greater potential. So the company provided guidance for the remainder of 2023, and the sporting goods side is going to be about 1.8 billion in revenue, and then 1.3 for outdoor. Now, outdoor is going to continue to grow into 2024. And then the forecast is that the sporting goods side is actually going to decrease in revenue, which is a little concern. The margin's still going to be a little better, but this is a concern on the sporting goods side. So looking at their performance, we did have a drop in revenue, which I talked about, but the good news, they continue to be profitable and generate EBITDA. Now, their free cash flow, they maintained good free cash flow in the current quarter that they just closed, even though their revenue is down. So again, that's a sign of a good business when you have a reduction in revenue, but you still generate really good free cash flow. So Vista Outdoor is put into the category of outdoor items, and I like comparing them to like Yeti and Topgolf and so forth, even Johnson Outdoors. And as you can see, they have higher PEs. Vista has a really low PE, which is incredibly low. I've showed that they're consistently profitable and generate free cash flow. So I think if they can get closer to these competitors and maybe raise their PE to 12, that'll really change their valuation considerably. It'll be multiple expansion on earnings per share, and it'll increase the value of the company. So I'm going to use a higher multiple than 6, because 6 is just too low on my valuation. The balance sheet's in really good shape. They actually do the calculation for me. I want less than 3 times debt to EBITDA, and this company is at 1.7 times EBITDA, the amount of debt. So that's really good to see. Now, I value the company using the most current information, and I think that the stock is currently discounted at 41%. What I mean by that is that the valuation based on free cash flows and earnings per share is I think each stock is valued at $40.47, but the stock market will sell you as much stock as you want to buy at $28.77. I get the free cash flow valuation by taking their free cash flows, which start with 290 million, which is what they guided for 2024. And I'm going to grow that revenue by a reasonable amount and grow that over the first 4 years. And then after 4 years, have a terminal value that's going to grow at 3%. That's reasonable. They're probably going to do better than that, but I think it's a good conservative approach. Nice high weighted average cost of capital, because it is a smaller company, lesser known. So I'm going to use a higher weighted average cost of capital. When I discount all these free cash flows, I get a net present value of $3.1 billion for the company's free cash flows. I'm going to add the cash that they have on the balance sheet and take away the debt that they have on the balance sheet. That gets me an equity value of $2.2 billion. Their market cap currently is $1.7 billion. So it offers up a discount of 32% when we use the free cash flow method, or discounting free cash flows. What that means is, based on the free cash flows the company is going to produce, each share is worth $37.93, but the stock market will sell you shares at $28.77. Looking at earnings per share, this is the expected earnings per share for the current year. I have a valuation formula that I use, taking earnings per share. I'm going to use a multiple of 12, which I think is reasonable. They are a premium company. Their products are very well known, and I'm going to grow it by 3%. Based on that criteria, the earnings per share method gets a stock value of $45.57, but the stock price is priced currently at $28.77. So it offers up a 58% discount. I blend the two and I put more weight in free cash flow. I actually take 2/3 of that and then earnings per share 1/3. And I get a blended value that generates a discount of 41% on Vista Outdoor. All right, so let me get back to my 4 questions that are deciding factors on whether I should buy, hold, or sell Vista Outdoor. First, do I think the company is interesting? Absolutely. Do I want to be part owner? Yeah, and I like the industry as well. Now, I can't give management a check mark, and I think there's a lot of turnover at the leadership role. I think they have a new CEO coming in. They're doing a divestiture. So the best I could do here is I need to wait to see what the new management team is going to do and how they're going to perform. There's just too much turnover right now. debt is less than 3 times EBITDA, and there is a discount in the stock. But given that there's a lot of things that are going to be changing, you got management change, you're going to have the company split. I'd rather wait. I'd rather wait and potentially invest in the half that is more valuable, which was the sporting goods side. So I'm going to wait. I'm going to keep an eye on it because I think this is a small stock. With small stocks, small investors have an advantage. We can do the homework that other analysts aren't willing to do because they're focused on the big stocks. And we can really pick up a really discounted stock, hold that stock, and make lots of money. Vista stock's done fairly well this year. It's up 15.54%, which is fairly good. I think it's keeping up with the S&P, if not beating the S&P by just a little bit. The valuation again is higher than their current stock price at $28. But again, there are the issues that need to be addressed before I'm willing to buy shares in Vista. But it's good to see this. The stock's been going up. A lot of volatility. I like volatility in stocks because it gives me an entry point. And if this one had 4 check marks, I would totally be buying on these dips so that I could buy at a dip and then see the stock go up. So Vista Outdoor is very interesting this year. I'm not ready to invest because just too many things are changing. But this is an opportunity to make some money if the right things line up. Once the company separates, I'm going to evaluate both companies and see if either half is worth investing in. I think that the market, this is small enough for the market to kind of ignore it. And I could pick up potentially a stock at a discount. I hope you enjoyed the video. Do me a big favor and like my video and subscribe to my channel. That'd really help me out. Good luck investing in 2023.